what would really stink is if you think for 6 months, 12 months, 2 years, I'm on this path and I've looked at face Google, whatever, and I know what I need to do, only to find out you were listening to the wrong person.
Hey everyone, my name is Brenna. I'm a realtor with SimpliHOM, and today I'm here with Jennifer Otto, a loan officer at Iberia Bank. Thank you so much for joining me, Jennifer.
Thank you so much for having me, Brenna. This is a really cool opportunity, and I love all of the content that you're putting out for your followers right now. It's amazing.
Yeah, so we can start off. Just tell me a little bit about yourself.
Well, thank you for the opportunity. So I have been in the mortgage business for about 25 years and in all facets. So I've done operations, processing, closing, the backroom stuff, and have kind of worked my way from the bottom to the top and became an originator in my own practice in January of 2020, the year of COVID, right? I am great with timing. So that was really fun, learning how to, I think the words of 2020 were pivot and shift and unprecedented, right? Those are the words that in 2020. So I had to make the shift and the pivot to online format pretty quickly, which was pretty comfortable for me. But that was a lot of fun as well. But just been in the mortgage business for a really long time. My passion is in helping people achieve homeownership. I really believe that people who own homes show up differently in life. There's a pride that comes with it. There's a swagger that they bring to work, to their kids, to everything. And it's maybe a little Pollyanna, but I'm like, all I want is everyone to own a home, not world
Same
peace.
here. Same here.
So yeah. So that's kind of what fuels my passion is. And then in the educational sides, which we'll talk about today,
right.
But that is what really drives those activities for me, is the passion, not of giving everyone a home, but of allowing people to understand and have the tools to achieve home ownership.
Absolutely. And that's why I wanted to talk to you so bad, because I was like, you're just so good at the education part of it. I know we've talked before a lot about it, and you've even taught me so many things. So, that's why I wanted to, show everyone what you have to say. So yeah, thank you so much. But yeah, for those who may not already know, can you briefly describe and walk us through a real estate transaction from your side of it?
Oh yeah, for sure. That's a great question. And I find that most people don't understand what's coming. And so it's just the fear of the unknown is very scary.
Mm-hmm.
So really the first step when you are considering maybe thinking about buying a house in the next year, it's a really great thing to go ahead and talk with a mortgage lender and get what I like to call a financial checkup. And the same as when you go to the doctor and the nurse comes in first and puts you on the scale. Yikes, right?
Yes,
At least in my
right.
case. And they do your blood pressure and they take your temperature and they do all of the preliminary tests, right? And so the same thing with me is you're going to come to me. We're going to talk about, how tall are you? How much do you weigh? What is your blood pressure? What's your credit score like? Do you have a job? How long have you been there? And get some preliminary information so that then we can decide, are you sick or are you healthy? And if you're sick, then we can help you figure out what is the problem, what is going to be a hurdle for you, and how can we make that better? What's your medicine? So talking to a mortgage lender is first and foremost. And just a side note, it doesn't cost anything to talk to a mortgage lender. So don't worry about how much does it cost? And then I'm going to be obligated. There is no cost to talk with a mortgage lender. So that is a question I get often. So just wanted to put your mind at ease. Yes. So once you talk with your mortgage lender, a lot of times you find out that you're in a better position than you thought. And a lot of the myths that are out there, one of the biggest myths is down payment, right? People still
Absolutely.
think that they have to have 20% set aside for down payment, which is so far from the truth.
I wonder where that
And,
came from, you know,
you
like
know, I think
where
it
did that
literally
come
came
from?
from when mortgages became a thing to begin with. I mean, we're
Mhm.
talking like the 20s and 30s.
Yeah.
And when the FHA, the Federal Housing Administration, became an administration, I believe it was under Franklin Roosevelt,
Hmm.
when the New Deal came out,
Yep.
I think is when the FHA was created. And
I
that's
think
the
so too. That was in our schooling.
yes. And so that was the first time the FHA loans allowed for less than 20% down. So it's just like there's been this old wives' tale that has literally been
Yeah.
carried forward from eons ago. I mean,
Like I'm wondering too, is like, have parents told parents, and you know, like that's what I'm saying, is it's just been carried over. I think like even Dave Ramsey like said something about it at some point, and I'm like, it's a myth, you know, it's 3.5 for FHA, you know,
mhm.
so it's not 20%, but you know, that
No,
20% is of course a great, you know, percentage to have, and it knocks off that insurance, but it's not necessary. Yeah.
yes, absolutely. And that's a big part of the education that I love to do, is just really breaking some of these myths and stereotypes. Because I think it is, we don't have education about finances in schooling, not
Right.
in high school, not in college. And a lot of parents, frankly, don't do a great job of educating their children because they don't know. They're just kind of hunting and pecking through life themselves. So they're like, I'm not going to tell my kid, I don't know.
Exactly.
So
Yeah.
we have a whole bunch of adults running around, and some of them have figured it out. They've taken the time to educate themselves, and or just life experience. But a lot of people still don't know. I mean, I talk to people all the
Yeah.
time who are in their 40s, 50s, 60s who either have never bought a home or still have no clue about money and how it works and credit and all of that stuff.
Yeah. And, you know, when you are an adult, and it may be embarrassing to ask those things, you know, if you're 40 years old and you don't know those things, and it's like, oh, I don't really want to ask those, you know, so having a program, having education, having something in place for those people, I think is incredibly important for sure. Yeah.
Yes, absolutely. And I guess another big part of my message is there is no shame in not knowing, because you know no one ever taught us these things. No one has ever taught us these things. So
Yep.
um getting that help is no more like embarrassing than going to the doctor and being like, hey, I'm
Yeah.
having a hard time breathing, what is going on with my lungs? You're not
Yeah.
embarrassed by that. You're just like, there's something happening, what is it?
Right.
So,
Yeah.
so the first step is just talking to a mortgage lender and just
Yeah.
figuring out, what that looks like. And I always love for people to talk to me well before they actually want to buy a house. You're not wasting my time. It's not like, not what you're supposed to do.
That was my other question, was, does it need to be perfect? You know, a lot of people think they're like, oh, I need my finances to be perfect before I actually go to a loan officer, but it really doesn't, right?
No, and it's better for us to have a little bit of time, because
Mhm.
it never ceases to amaze me when people try to use common sense about finances, and they're like, well, this just makes sense. And it's like, and I kind of laughingly will say, a lot of stuff with mortgage lending isn't common sense. It
Mm.
makes no sense at all
Right.
sometimes. But that's where talking to someone who is the expert can help you. Because what would really stink is if you think for 6 months, 12 months, 2 years, I'm on this path and I've looked at face Google, like, whatever, and I know what I need to do, only to find out you were listening to the wrong person
Mhm.
on Facebook or Google or Yahoo, and you've wasted 2 years of your time, like, down this path that's not going to get you into a house.
Absolutely.
So absolutely talk with a mortgage lender. Not your mama, not your best friend, not somebody you've met on Facebook. Like, talk to a mortgage lender that is licensed to give you this kind of advice. So,
Absolutely.
but yeah, that's step one.
Yeah, step one for sure.
Yeah.
So I know you kind of like touched on credit score, but what role does credit score really play in all of that?
Credit score is unbelievably important. And Again, I don't make the rules. I just play by them. And I don't know that credit score, if Jennifer was in charge, if anyone was asking, Jennifer, that credit score would be the end all be all, because honestly, there's so many things that can go wrong with credit that people don't know. And it's not, if you have a bad credit score, it's not because you're a bad person. I can absolutely 100% tell you that is the case. It's that you've gotten bad information. Maybe life has happened to you along the way, and, just not having the information about it. So credit score is extremely important. And, not to get super technical or super deep here, but the different types of loans that you can qualify for based on your credit score. And then when we're looking at a conventional product versus a government product, it's risk-based. Conventional loans are risk-based. So it means the higher your credit score, the better your rate, the better your mortgage insurance. Everything is driven by multiple factors, but credit score is one of the biggest ones that drives your expense. The biggest expense on a loan is interest. Your interest rate is determined by your credit score on a conventional loan. So it's really important. And, even if it's too low, it could completely bump you out of qualifying for any type of mortgage lending at the moment as well. So it's huge. It's literally step one when we're talking about qualifying you. So when someone applies with me, it's binary. There's either A, your credit score is sufficient, we can keep having a conversation, or B, your credit score is deficient and we need to just deal with the credit thing. If it's sufficient, then we start getting into pay stubs and income and debt to income and all of that. But really, that's where it forks. I mean, if you don't have a credit score that meets the minimum, you kind of go to this side, not the bad side, but this is going to take some time and some finesse and some education to get you where you need to be, to then start having conversations around, how much do I qualify for?
Absolutely.
What is my income? How much money do I need for down payment? We don't have those conversations if we're on this side. I have those conversations over here.
And what are some tips for people who have low credit scores?
So the most prolific tip I can give you about credit score is credit cards are absolutely the key to supercharging your credit score. And it sounds intuitive. You mentioned a guru a minute ago who is absolutely against credit cards. And I will tell you, I'm also against credit card debt. And I know that sounds like I'm talking out of both sides of my mouth, but credit cards are extremely important. But the kicker with credit cards is the limit versus the balance, that ratio. And a lot of people floating around and face Google will say 30% is the magic number. And 30% is the amount that it affects your credit score. So think about it when you were in high school and they would say this exam accounts for 30% of your grade. That's kind of like this. Credit card usage accounts for 30% of your credit score. So 1/3. So let me give you also another perspective on this. The other 1/3 is whether you've made your payments late or not. So let's just think about that. 1/3 is whether you pay your bills on time. And the other 1/3 is how well you use credit cards. That's really, people like, I let people sit with
I bet that blows people's minds, because it's somewhat blowing mine.
Yes, it does. And so I also can put it this way. It's more of a negative way of saying it. But if you don't have a credit card, it's as if you are making a late payment every month on something.
Wow. I did not think about it like that.
So it's really important, and it's important to use them correctly. And my definition, this is Jennifer's definition of using a credit card correctly, is you want to keep your balance versus limit under 10% and pay it off every month. So what that looks like, let's say we go get a Kohl's card and we get $1,000 limit. We don't ever want to spend more than $100 on the card at any time. And you want to pay it off every single month by the due date. Because I'm not asking us to make banks and financial institutions rich off of the interest. And
Right.
if you pay your balance in full by the due date, you don't pay any interest on the money you've used.
Mm, true.
Right.
Yeah.
So we're not costing you money.
We're not, it's not at all. It's just exercising, your credit cards and actually using your credit score. That's the really common myth, is that, using credit cards, you're going to go down that hole. You spend the money, like you are in
Yep.
control of it. A lot of people think that they're going to go into the overspending, and then, but I think your rule of keeping it in a certain limit, is going to be just so helpful for so many, because if you say, okay, I can't spend more than this on this card, that can really put things in perspective and, decrease that overspending. Because sometimes it is, easy to do that and say, oh, well, it's not a huge deal, I'll just pay that off next month. You know what I mean? So I really like that. Yeah, those are definitely good things to keep in mind. So yeah.
Yes. Yes. And I also, with the credit card thing, I recommend two, at least two. Now, here's the thing. If you happen to be a married couple, then you can have one credit card in spouse A's name and one credit card in spouse B's name, and then have each other as authorized users, right? Or if
Right.
one spouse has two credit cards, don't go get spouse A two credit cards, just put spouse A on these as an authorized user.
Gotcha.
So that works great for spouses, people who are married. And the only reason I caution you a little bit to doing it for, like, say, unmarried individuals,
Mhm.
like a mother and a daughter, or two roommates, or significant
Right.
others who are not married, is sometimes if that person doesn't go on the loan, there are instances where we have to take them off the credit card. So just be really careful in the instances where you may not be married to the other party.
Right.
Okay.
Yeah.
Now, another little tip, if you allow me, is if you are a parent, when your kid becomes like teenage years, I encourage you to add them to one of your credit cards as an authorized user. Now, I'm
Mhm.
not saying let them know or let them spend any of your money, but it's a great way to help them build their credit. It's almost like an inheritance where you can pass that legacy on to your child, um, and help them get established with some of their own credit, to get stuff in their own name when they become 18. Because then the other 15% of that credit card thing is the length of time you've had a card.
Right.
So it's really, really important,
Yeah.
that length of credit history there. And the only way you can really get some good length of credit is on a credit card.
Absolutely. I mean, I got my first credit card right when I turned 18, and still my length of credit, history is not very long at all. So if you have that time beforehand, which sounds like you can get that time beforehand, that would definitely help, because like you were saying, that's another big part of it.
Yes, exactly. And that's also why when people pay off cars, that their credit score drops,
Oh, yeah,
because they go from having 45 or 50 months
very true.
on a car loan, and then it closes and boom, they lose that 50 months. And so people, again, that's one of those common sense thing. People think, oh, well, if I pay off my car, that's going to be
Right.
great for my score.
Getting
And
rid
then
of
they get,
debt. Yeah.
and then they get really upset when their credit score drops.
Mm-hmm. Yeah. No, and that I've seen that, I had a friend who there's some thunder going on right now, but I
Yeah,
had
I
a
was going
friend.
to say, I just saw lightning and thunder.
Yeah, I'm like, just right now. But yeah, I had a friend also who just paid off their card, and then it dropped a few points, and they were like, what? I just, so it really is counterintuitive, but it's very true. It does happen. And so, yeah, I think just exercising, and you said 2 cards is what you recommend. That's the
Yep.
good amount. Okay. Those
I
are
would
some
have
great
two,
tips.
yeah, 2 credit cards. And honestly, I would not ever do car loans. If you can avoid them, avoid
Really?
them. Yeah. I mean, I'm not mad at car loans, because obviously car loans are a thing. But it does have that whole cycle of, you'll get one for 4 years, 5 years, 6 years, right? You
Yeah.
build up that length of credit history, and then you close the account and your scores are impacted.
Mhm.
And then, that doesn't even count what we're dealing with when it comes to debt to income ratio, which I'm sure we'll talk about later, is that
Yeah.
payment. Sometimes if you look at it from the standpoint of, let's just say somebody has a $50,000 income,
Mhm.
right, in a year, and you owe $30,000 on a vehicle, you owe almost 100% of what you earn in a year on something that depreciates over time.
Yep. Yeah.
That's not a great use of your money.
Mm-mm. No, you're absolutely right. Yeah, car loans are one of those things, um, I've seen cases of people just getting a car right before they're going to get a house and not thinking anything of it. And then, they don't qualify anymore. So yeah, they're one of those things you have to be careful on when you're going to make that purchase and how you do it, for sure. So,
well, and the guru that you talked about, that is one of the things that I actually do recommend, is that, try to keep your your cost of your vehicle that you operate to about 10 to 20% of your total overall yearly income. So in the case of the $50,000 a year earner, you would want to try to keep the cost of that vehicle under $10,000.
right.
And I know that, people are
We
like,
have to do. Yeah.
BMW, or I want a brand new car, or I don't want a car that's going to break on me. And I will promise you, like, you can find vehicles, I'm not talking about beaters, but you can find used vehicles that are dependable and that fit into that price point. And two,
Yeah.
you've got to think about, this is a little bit more advanced conversation, but you've got to think about the investment of your money. When you're talking about a car, it's literally depreciates every single second of every single day. And do you really want to have your money in something that is going down in value versus what we do in real estate is that it's going up and it's getting better and better every day.
Absolutely.
So just some perspective there.
Yeah, I think what you say is totally, it makes sense, but yeah, some people will say 10,000, no, like I can't get anything with that. And there are absolutely great cars out there for that amount. So,
Yes, absolutely.
But I totally agree.
A paid for car, and a paid for car is amazing. Every now and again, I'll get like a little bit of that twinge of car envy where it's like, I need to have a backup camera or Bluetooth and then I'm like, ooh, but
Apple
driving a paid for car is just like the bee's knees.
It really is. Yes. So before we get off the topic of credit scores and everything, do you have any success stories or, anything where someone came in and their credit score was not anywhere close to it and they were able to buy a house in a few years, anything like that?
Oh, girl, not even a few years. The client I just closed on, I think she closed in April. We started talking in October.
Yeah.
So 6 months. And, her scores were mid fives.
Okay.
Her credit score jumped about 135 points in 6 months. And, she didn't use credit repair, not with me. Now, she had been enrolled in credit repair for years before she got to me and was very frustrated because she spent hundreds, if not thousands of dollars on their annual monthly fees and just wasn't seeing any success. And what was happening was kind of what I tell people is going to happen is you're going to get a little bit of progress and then something happens and it goes back. And then you get a little bit of progress and then it goes back. So what I teach and how I suggest people go about dealing with their own stuff is it just, you get better results and you have longer lasting results. And now she has an education that she can, and I tell people all the time, like, haha, IW, ambassador of credit. It's kind of silly, I know, but I'm like, go and tell your friends, your families, your cousins, your coworkers, because I can't get to everybody. So either tell them about me or you educate them, because it's going to be worth more coming from you because they know you and they've seen you go from struggling to owning a home. And they're like, what just happened? So yes, absolutely.
Awesome. Yeah.
6 months and she was in a house. Yep.
And how many points did she go up? 130?
135.
That's insane.
Yep.
That's
she went from the mid fives to pushing 700.
Yeah. And it makes my heart ache that she was in credit repair for years. And, in 6 months, she was able to just do that with you. Like that's, crazy for sure. That's amazing. Yeah. Well, I'm glad. that's the thing is some people, they think, I'm never going to be in that situation. I'm never going to be in a place where I can buy a home. And, in 6 months they are. So
And
that's,
it was a very emotional day for her and her husband and her daughter. And, and she was one of my success stories that, through tears was telling me, Jennifer, no one in my family on either side going back as far as I can track has ever owned a home,
wow.
ever. I mean, it gives me chills every time I was like, oh,
that's amazing.
that's why I do what I do.
Yes.
That right there, because that breaks a cycle. And of course we can get into all sorts of, stuff with that, but that breaks a cycle that is going to do more for her and her husband and her children than anything else I can think of. Just the way they're, that family tree is going to be changed. I mean, think about when people are like, I'm the first person to ever go to college, and how that changes and how much pride that brings to them. It's a very similar, but this actually grows. So this is something she can leave a legacy to her children.
Absolutely. So I will link down in the description, your credit workshop, so people can take that and ask you questions and all of that. How long does that typically take to go through?
The workshop is every Saturday, and usually it runs about an hour.
Okay.
The workshop is free. You don't have to do anything except show up. And we'll go through and give you the ins and outs of how all of this works. And then if you would like to chat with me later about your specific circumstances, or you want me to look at something with you, you can then book a 20-minute session with me, again, free. I'm not allowed to charge for my services or my time. But this is my way of giving back. This is, instead of going and serving soup at a soup kitchen or passing out mittens to the homeless or what, not that I don't do that, but this is my way of giving back to my community. So I really volunteer my time and put all of this together because I truly believe this is the way to help the most with
and you
what
already
knowledge I have.
I mean,
Yes.
Look at the difference you're making. That's amazing. That's a huge success story. And I'm sure you have many more as well.
Yes.
But yeah, that is huge. So yeah, I will definitely link that, as well as you also do a homeowner class as well, correct?
I have 3 classes. I have my credit workshop. I have Adulting 101, which is a fun, I am an adult, but I don't know anything about finance at all. And so we do a little bit about home buying, a little bit about budget, and a little bit about credit. It's kind of like a little sampler platter, if you will. That one's also about an hour. And then I have a class called Mortgages Made Easy. And it's a really fun class. And we talk about the 4 different types of loans. And I compare them to different flavors of cake. And we talk about the 4 ingredients of cake making and the 4 ingredients of loans. And it's just a really fun, easy way to understand the differences between the products that are out there. Because if you are like most people, you get lost in the alphabet soup of conventional and FHA and VA and USDA and THDA and blah, what does all of it mean, right? Mm-hmm. So we break it down and put it in a way that's a little fun. And we talk about cakes, makes everybody hungry. But that is my Mortgages Made Easy.
Okay, gotcha. Yeah, so you kind of mentioned about the loan types. Can you kind of just give a brief overview of what kind of loans you can get here in Tennessee?
Yes. So the 4 main kinds of loans that pretty much every lender that is in mortgage lending, so not like a bank or a credit union, but like a mortgage lender, is conventional. FHA, which is the Federal Housing Administration, which we talked about with Roosevelt. The VA, so for any of our veterans who have served, served in the military, they have a wonderful benefit that's 100% financing. There's a lot of really great perks with that loan. And that's for our veterans. And then USDA, same administration agency that stamps our beef. If you go to the store and buy steak and there's that USDA, it's the same one. It's the United States Department of Agriculture. It sounds like we'd be buying a farm, but we're not. It's actually just a property that's out, not in the city limits. And that's also 100% financing. So those are the 4 main types of loans. Then you have attachments to them, like accessories. So THDA is the Tennessee Housing Department agency loan that is down payment assistance that's up to $7,500 for first-time buyers who are looking to get qualified to purchase a home and don't maybe have money for closing costs or down payment.
A lot of people don't know about that loan, so I'm glad you mentioned that.
Yes, THDA is really great. And sometimes I'll compare and contrast it for people, and it's not a one size fits all, but it is an option. And then the company I'm currently with, we have what we call CRA products, which CRA stands for Community Reinvestment Act. And the federal government requires certain agencies or certain institutions to give money of their profits back to the communities where they're located. And the way our institution does that is through, we have a doctor program, we have a professional program, we've got a first-time buyer home start program. We have our first responders program, so teachers, EMTs, firefighters, police officers, nurses, that kind of thing. And a lot of those products are 100% with no mortgage insurance. And Brenna,
Yes.
Mortgage insurance can account for $100 to $400 a month in your monthly payment. So with no mortgage insurance and no bump to the rate, then your buyer then has so much more buying potential.
Absolutely.
Instead of having $1,000 payment buy you a $150,000 house, $1,000 a month payment could buy you $180,000 or $190,000 house. That's huge in the market we're in right now.
Oh, yes.
So those are some really great products. And again, they're accessories, they're flavors of the big four, is what I call them,
Right.
the big four. So it kind of goes on top of and inside, and but it's really the four main types of loans.
Yeah, no, that was a great, explanation of all of that. Because I do get questions all the time about that. And we learned all about all of those in real estate, school and everything. And people ask about what kind of requirements they need and all of and I'm like, just talk to the loan professional. I'm like, I can tell you for sure, but talk to the loan professional, because they can say, and take a look at you individually and say, this is what we recommend for you, or, and that's where you guys come in and you guys are able to pair them with the right loan, because that's really what you're doing,
Yep.
So, yeah.
Absolutely. And that's what I tell people right now. I think when I added it up, there's 57 different combinations of loan and grant program and all of this. And there's no way any layperson who doesn't do this for a full-time job could ever research all of the ins and outs of how all of it works.
Mhm.
And, so not saying don't be an informed buyer,
Right.
but just, there's just no way for you to completely investigate and completely vet out every different situation.
Absolutely.
So that's really what your mortgage lender should be doing. A mortgage lender should never tell you, okay, Brenna, this is the kind of loan you should get.
Mhm.
I would never do that. I would be like, okay, here are 3 different options that you qualify for, or 3 variations of one that you qualify for. And let's really talk about what your needs are, what your goals are with this home, and how long do we think we want to be there? Because that's going to play a really important part in which type of loan we pick as well. So I see myself more as like, I'm going to hold your hand and walk the path with you, and I hold the flashlight to kind of show you where the pitfalls are.
Right.
But it's not my life. Your life
Right.
and your home and your loan, you're going to live with it way longer than I will. And so I never want someone to go to closing and go, I don't know what kind of loan I got. It's just what the lady said. And I talk to people all the time, especially people who are selling their home, and they're like, I don't know what kind of loan I had. It was just whatever the loan off. And it's like, that just breaks my soul, like breaks my heart.
Yeah.
So
Absolutely. Yeah. No, I think that is a great way to put it, for sure. You kind of mentioned grants in there. I heard grants there as well.
Yes.
So I want to talk a little bit about that. What kind of grants are available in Tennessee?
So the THDA loan used to be considered a grant. They have turned it into a loan now. So if you are participating with the THDA, it is now a 15-year fixed second mortgage. So you would have two mortgage loans, two mortgage payments on that program. Every year in March, the Welcome Home Fund grants come out, and that is up to $7,500. The $7,500 is for our veterans. Anyone who's even served one day gets $7,500, and anyone who does not have military service gets $5,000. You are not required to be a first-time home buyer, so it's very unique in that point of view. And it is a forgivable grant, and it's forgiven at $1,000 a year for the first 5 years, I believe. Gotcha. Is how they do that. And that is considered a grant. So there's no payment on that second. It's not really a second. It is a silent second. So it is recorded as like a lien against your house. But it's just as it's forgiven over those 5 years. So that's a grant. There also is a Murfreesboro City grant, which a lot of people don't know about. It's through the city of Murfreesboro. So the property has to be in the city of Murfreesboro. I'm going to be honest, that box for qualifying on that on the income is a little small, but I have put some people in it, and it was a really great program for, I think I helped a single mom, which I probably shouldn't say that, but she was, getting kids. She had a couple kids and buying in the city of Murfreesboro, and she's gone on to sell that property and kind of move up and move out to the county. And
that's awesome.
Anyway, but it was just the way of getting her feet into the real estate market to start the process of investing versus paying rent, which is a whole other conversation. Right. But yeah, so there's the Murfreesboro City grant. There's also the Nashville Housing Fund, which even though it sounds like it's only for Nashville, it really serves all of the counties in Middle Tennessee. That one's more of a loan though than a grant. Okay. And it's up to $35,000. So there is a payment on that one as well. And those are the grants that I am familiar with. I've heard of some other different programs, and like we have a grant that is either $3,000 or $5,000, depending on your income limit and where you're buying and things like that for first-time buyers. And that the cool thing about that particular grant that we have with Iberia is it's 100% forgivable on day one. So if you bought a house today and then you saw your neighbor put their house up for sale and you're like, hey, I want that one, you sold this one, you don't pay us any of that money back. It's a true grant, which there are not very many true grants these days. And then if we're talking about down payment type assistance, something people don't often think about are gifts. If you have a family member who has a 401k or owns a home, they can get a loan or a withdrawal on their 401k to help gift you money. And then by the same token, as a buyer, if you have a 401k you've contributed to, you can typically use those funds to pay for your down payment or closing costs as well. And people often don't think about that because the market has done so well over the last, couple of years that their 401ks have grown. And if that's the case, like, let's leverage that money to help you, get into a home. So,
right. Yeah, I completely agree for sure. So I'm going to kind of wrap it up. I know we've kind of touched on a lot. Is there anything else that you kind of wanted to say to anybody? What's your advice? Like, what's your final piece of just, if you're trying to buy a home in 2021, you need to know this?
Well, I think if you're trying to buy a home in 2021 is you've got to have patience. Right now, the market is on fire. I have one realtor who says it's on fire. And I'm like, yes, it's absolutely on fire. And so you've got to bring your patience. I also want to say, don't wait. I talk to buyers all the time that are like, oh, I'm going to wait until prices go down. Do you have a crystal ball that the rest of the world doesn't have? Because all the economists that I follow, who this is their job in the mortgage and real estate space specifically, I just don't feel like we're going to see any sort of, this is not a bubble. This is not 2008. Prices are just going to continue to rise. And, if when they change the moratorium on evictions and foreclosures, I just don't think we're going to see a lot. I think a lot of the lenders are doing a really great job with their clients to get their loans modified, or the clients are going to sell their house. Would you not want to sell your house and walk away with $100K or 80,000 or something, then to go into foreclosure and you walk away with nothing? So I guess that would be the sidebar of the sidebar, is if you are a homeowner and you had gone into like forbearance and you haven't been making your payments, please don't let your house go into foreclosure. Please call Brenna and get it listed and sell it and walk away with some money. Because with foreclosure, if they sell it for more than what you owe, they don't give you that money. You lose it. You lose it and you take the hit on your credit. Why would you do that?
Sell it. Sure. I mean, that's,
if you can walk away. Yeah. If you can walk away with 75K because the market is so amazing right now, 75K isn't going to fix everything, but you could go buy something small, mobile home on some land, or rent something. And then you don't take that hit on your credit. Yes. Yes. Don't let your house go to foreclosure. Don't let your house go to foreclosure.
Yeah.
If you're a buyer, don't wait for foreclosures because they're not coming.
No, I mean, and I believe it's September 30th or, you know, something like that. I think that's when they pushed it this last time, because they've continued to extend it and everything. But, you know, I have buyers asking me about that, and they say, are we going to see more inventory? Are we going to see, you know, a big change? And it's like, I wouldn't really count on it too much. I mean, we may see some shifts, we may see some prices, you know, but there's just really, I mean, there's not really much that's, I think will happen. And that's just from the professionals I've talked to, from, you know, other realtors, from industry professionals like you know, and that's the thing, is like, buy now, you know, buy or sell now. Like, that's just kind of what you should do, especially here in Tennessee, because Tennessee is crazy right now. I mean, it is a crazy market. Everyone wants, like, I've talked to, I think 10 or 15 people that have moved to Tennessee, and they all say, and a lot of them are from California, so they all say, people are so nice here. There's rain, there's lakes, there's lush, you know, like, and they just love it here. So here in Tennessee, property values are going to keep on going up. People are going to continue to move here, and, you know, get in while you can. So, yeah.
Absolutely.
Yeah.
And we've always had a little bit of a microcosm here in the Middle Tennessee area. Even in 2008 and 2009, we didn't see the recession quite like other parts of the country did.
Right.
And it's kind of a perfect storm. You know, a lot of it's a perfect storm. We have so much industry here, and the industry is brought in because of no state employment taxes. Right? The cost of living here is fairly low, but it is starting to catch up with our peers. Other cities that are similar in size, we are starting to catch up to some of those cities. So yeah, I mean, now is the time to buy if you are wanting to be a buyer. You know, don't wait, because also rates, inflation, if you keep up with what the Fed said a couple of weeks ago, you know, they were saying inflation was going to stay at 2.4. Now they're predicting 3.4. And a lot of the economists are saying that's even really conservative, that they expect more like 5 or 10%. And inflation is the evil nemesis to interest rates. So as inflation rises, rates will inevitably have to rise. And so again, this is something, I'll leave you with this. So for every 1% that interest rates rise, you lose 10% of buying power. So someone who was approved for, let's say, 500,000, rates rise 1%, their buying power now is 450.
Wow.
So
you're right.
Now, when I say now is the time,
now is the time.
Now is the time. Be patient.
Absolutely.
Know that, you know, I believe in energy, and I believe that, you know, what is meant to be will be. And I've seen it in 25 years. So the right house at the right time will be there for you, but you have to prepare now. Start talking to a realtor now.
You have to start looking
now. Yes.
You have to actually put forth, you know, and
The
actually
effort.
start the process and, talk to a loan officer, talk to a realtor, and, find the place. So, and that's the thing too, is people will hear all of these things. The market's so hot, there's low inventory, all this stuff. Well, people are still closing houses. Buyers are still getting homes, and it's not just out of state people that are like, people are still purchasing homes. And I've been able to get buyers in and not pay crazy amounts over asking. There are ways to get around, there are ways to, not spend a fortune in this market. So yeah, and to qualify for more. So
Absolutely. Absolutely.
I completely agree. Awesome. Well, is there anything else that you have to say to everyone?
I feel like we've covered a lot.
I know we've talked so much.
I mean, we've covered everything from credit to types of loans to down payment and all of that. But yeah, just if you have a question or just want to, hit me up, I'm sure she'll put all my contact info in there. Just,
Sure will.
send me a text, send me an email. I'm not scary. I don't mind answering your questions. You can find me on Facebook. You can send me an instant message. I really just want to be a resource to help guide you on your path. Now, of course, I would love to also earn your business. That's how Brenna and I both get paid, is we get paid when you get what you want, when you buy a house and when you get a loan. That's how we get paid. And so, yes, we would love to help you and encourage you and aid you along the way. So just hit us up and let us know, what we can do to serve you as you are preparing either for now or down the road.
Absolutely. Yeah, couldn't have said it better, for sure. But if you have any questions for me or for Jennifer, just leave them in the comment section down below and I will get them to Jennifer for sure. And then I will also put all of those links and her information in the description. So thank you so much for watching and I'll see you next time.
Bye.